Okay, welcome back to another video, and today I'm just doing a fundamental analysis, technical analysis overview of the market. It is Sunday, 29th. Just have market open on the currencies, and we've got 15 minutes until, or 10 minutes until market open on the indices as well. So, and the futures exchanges. So we've obviously now in a dead bearish market on the S&P 500. We've just dropped below the 200-day moving average on the daily time frame, and we're starting to see these EMAs possibly crossing here as well. We also failed to give support at this 6,500 level, which is the level I thought, well, if we do find support here, then we can maybe see upside and maybe possible new time highs, all-time highs on the S&P, but we didn't, and we crashed straight through that. And now we're looking for maybe tariff high support levels around 6,100. I'm really thinking we're going to see possible movement around this area here, around 6,000. Maybe we'll see 5,900. But these are areas I personally want to buy as an investor and buy the dip here. I'm not really looking too much at the moment to catch this falling knife, but as a trader, I'm looking at this tariff high as a nice level of structure before which we can come down to as a technical analyst. As a fundamental analyst, I'm looking at the war. I'm looking at bond yields at the moment in the US being, obviously increasing all the time. We've got the 2-year government bonds also shooting through the roof here, and a 10-year at 4.428%, which is pretty crazy. As we've just seen this huge spike up from the war, which has been pretty obvious that we've seen capital flows move from indices um, into yields. We've seen money move away from gold as well. It's a pretty we just seen this downside to gold here, which is pretty obvious. That money has been moved around, and investors are looking to stuff to get in with yields really at the moment. And it looks like the money flows are really into yields and the dollar, which is the obvious one here for me. We are struggling to sort of break above this highs on on the dollar here, but I'm sure we will. And this could be a nice breakout trade on some of the dollar pairs to get into the market here. I'm sure. So that's quite interesting from a fundamental standpoint. Um, we see gold here. Will we find support? We've obviously got quite clear support here in the market of the 200-day moving average as well, and we are also on the RSI quite in the oversold territory as well. So this, technically looks like a nice area to buy from. Fundamentally, though, we're not quite there on the metals. I think we're still looking pretty difficult to look for long opportunities as we see interest rates still looking to be increased in the US, which is, if I bring up the thing here, we have 74% chance of hiking Bank of Japan and the Fed. We have possibly unchanged now, but globally we're seeing hikes. Europe, England, uh, and Australia still with 62% hikes. And yes, if you asked me a week ago, this was looking at 20% chance of hikes in the next 30 days, the next decision. Now it's going to unchange. But realistically, inflation is going to increase from this war. We have oil staying around this high. Even last week, we look to really rebound straight off again and stay at the 100 level, which is not good for the economy at all. And this will make it very, very difficult for, central banks to not change interest rates, because, the only way to really bring down inflation is to increase interest rates. And that's the idea, is when inflation increases, interest rates increase to start to bring it down. And that's what we saw in COVID. When inflation got to a ridiculous amount, we saw interest rates really rise, and eventually we did see inflation come down, and with that we saw interest rates also come down. Well, with US oil, if we still, this is the WTI crude oil, it's at $101 at the moment. If we do see this happen for the next few days, then I do think we'll see, central banks look to keep rates high for longer, and whether they don't increase interest rates at all, either, that still is a slightly bullish indication of the US dollar. If you look at pairs even like GU, this is still dropping against, the US dollar is still finding strength against the pound, and the pound, if we look at the pound government bonds, we can see they're nearly at 5%. This is pretty high times. This is at all-time highs, in fact, for gilts in the pound. So that's really telling you, that interest rates in the UK do look to increase. So even with that sentiment on GU, we're still seeing US dollar strength over the pound, which is interesting. So you can really see the commanding, influence that the dollar has at the moment over these things. UJ, we're at that area of intervention we've all been talking about. Everyone's been talking about online. I personally don't think we'll see an intervention whilst the war's going on. That is just my opinion, though. There's no real backing behind why. And the only real backing is I do see Japan really struggling from this war as they do import a lot of their oil. I think 97% from the Middle East, which obviously is not good for them as oil prices have been increasing and the Strait of Hormuz is still shut for a lot of countries. So Japan's going to be struggling. Maybe this is the wrong time to intervene. I don't really know, but all I know is we just got to be careful trading things like this UJ at the moment. But I still think we got a bit of upside here. We may see 161, 162 even. Some people don't think we'll see intervention until maybe 164 level, which I can see that as well myself. If you look at some other markets like Euro USD, we can see here that the US dollar is still strengthening against the euro here. We did see some possible strength from euro against the dollar, but then we saw that come down and we looked like we've broken past this sort of like upward channel here. We've broken past that, so maybe we'll see dollar now go down to make another a leg down. If you'll see this on the day time frame here, we have this like level of consolidation. We're reacting off to these highs here to the top, and we're breaking below 200-day moving average on Euro USD. So I see this as a bearish setup here on Euro USD myself. But we'll just have to see what happens. I haven't got a setup personally. What I would like to see is this level of structure get broken, possibly a retest into this 4-hour level of supply we see here, and then maybe I can look to go shorter there. But for the time being, I'm sitting on my hands for something like Euro USD. But I'm seeing a lot of possible indications in NZD. If you go to Trade Save Plus, which is the fundamental software that I use, we can see that the NZD is the most bearish currency that we have, along with the JPY, which makes sense. Obviously, Canadian dollar also wanting to possibly lower interest rates, as we can see with the Federal Reserve. With the this website rate probabilities, we can see there's a 60% chance of a cut. With current rates at 2.25%, which is interesting. That's recently changed the sentiment here. Canada before was maybe thinking of keeping rates the same, but now they look like to possibly go slightly dovish here, which is interesting during the war, probably because oil prices have got super high, and Canada is very reliant on oil prices. So their economy is probably doing quite well at the moment. So yeah, that's sort of my ideas here with NZD. Can we get in some NZD short positions? Everything, managed to take my profit here on NZD USD, and then the clear level to sell off again would be at this next level here, where we just need to see a push down in price, come back into a level of discount, and we look to go lower here. And at the moment we're sort of at this daily level here, and it looks like we may, I believe, push past this level. And once we push past this, I think we have room to go down to these lows here, and that will be our next level of possible support, which we may see hit on NZD USD. So yeah, that's my thinking there. That looks like a really nice setup, and we have NZD making this NZD CAD making this nice head and shoulders pattern. Again, all I'm looking for is that break below and retest to the downside. If we can ideally see the RSI coming into fair value, that would be a good indication for me to get short. Or even if we can see on the 4-hour for it to go a bit higher here, that would be ideal. But other than that, I'm not looking at too many other currencies. Really just NZD, USD, and pairs, and we'll have to see from there. But the main story is crazy high yields for pretty much all of the central banks, say Europe, pound, Aussie dollar, US dollar, Japanese yen still increasing, about to go to new all-time highs again. And gold struggling, Bitcoin struggling, indices bear market, and we've seen that sentiment coming in, that bearish sentiment from the VIX there. As you can see, this huge upward momentum recently. Lots of volatility, which means normally that's a bearish sign for indices when the VIX is making these like you know sharp upward trends here. So yeah, that's really it for the video. If you guys have enjoyed it, smash the like button, subscribe, and yeah, I'll see you in the next one. But thank you.